Well, as you well know, technology continues to break the mold of financial services around the world. And in fact, peer-to-peer lending has become one of the hottest industries in fintech, promising to ease business financing through technology. Here to share more insights into the industry, joining me in the studio today is Ajit Raikar, the co-founder and CEO of peer-to-peer lending platform Validus. Ajit, great pleasure to have you here today. You know, the world has been lamenting about the access to funding, especially for SMEs, and governments around the world have been trying to sort of boost that and cultivate that. So how does P2P lending solve that issue and fill that gap?
Yeah, I think peer-to-peer lending, Adam, really is the new Uber in banking, I think. You know, as you probably know, there are almost, let's talk about in the Asian context, you know, we have almost 1 million SME customers in Indonesia. We have 250,000 SME customers in Singapore. They contribute almost 70% of the employment and 40% of the GDP, yet 50% of them don't have access to financing. And that's where P2P lending comes in to meet this yawning gap that exists for SME customers. And most of them have cited this lack of financing, Adam, as a big impediment for their growth. And I think P2P lenders meet this yawning gap by addressing the needs of SMEs in a fast, simple, easy manner.
Well, getting down to the nuts and bolts, exactly what value add does P2P lending bring to the table to fill that gap?
Yeah, I think P2P, you know, most SMEs have aspirations of being a large company, a much larger company. And if 50% of them don't have access to financing, peer-to-peer lending platforms like Validus meet this gap by giving a financing solution to an SME in a simple, fast and easy manner, and connecting them to investors, more importantly, who want to invest in these classes of assets, which they earlier have not had access to. So we're really meeting two needs, giving investors an opportunity to invest in an alternate asset class and giving SMEs what they need in terms of financing in a fast, efficient manner driven by technology. So as an example, on our platform, we give an SME an approval time of less than 48 hours. So from the time an SME applies to me till the time he gets his loan disbursed to his bank, it's 48 hours. Now, if you compare that with a bank's turnaround time, and not to complain about banks, they have their own processes and they have their own limitations, that turnaround time could be anywhere from 15 to 20 days. So we give SMEs money fast, quicker, and simpler than their alternate. I think we really help them grow and meet the aspirations that most SMEs have.
All right. You know, filling that gap is, of course, hugely important, but let's get to the issues of the gap itself and talk about the economic fundamentals. If SMEs find it so hard to get funding from the banks and the turnaround times are so long, does that put the investors in an advantage when you structure these deals? I mean, what kind of terms of financing are these SMEs getting in order to match the hurdle rates of the investors?
Correct. Clearly, P2P platforms cannot lend at rates that banks lend to, because banks have a cost of funding that is different from a P2P platform. But on our platform, for example, we in Validus provide an alternate source for investors and give them a single, you know, we would give them a return of about 10 to 11% for a product that is insured. Now tell me how many investors can get a product, invest in a 90-day paper and get a return of 11% for an insured product? There aren't too many products that I can think of that offer that opportunity for an investor that we, as Validus, for example, bring to the investors. But I think this is an education process for investors, because clearly investors need to understand the risks of the product. They need to understand what this alternate class means for them and how to access this alternate class of assets, which is something that I'm sure all P2P platforms, including us, are working hard towards, to getting the education process done for the investors to be able to access this, I think, very exciting asset class for them.
Wow, 10 to 11%. I hope I can get in on the game, because, you know, FD rates in Singapore are absolutely rock bottom. All right, Ajit, we've got to leave it there, but it's a very interesting conversation. Thank you for coming in today.
Thank you for having me.
Share your thoughts on peer-to-peer lending. That was Ajit Raikar, who's a co-founder and CEO of peer-to-peer lending platform Validus.